Is Ondas stock a hidden bargain or is it a dangerous bull trap? The charts are flashing clear sell signals and the downward trend is hard to ignore. Yet some of the smartest contrarian investors are quietly calling it massively undervalued right now. Who is right and where is the smart money actually moving? To understand what is happening, we have to look at what Ondas actually does. This is a highly specialized developer and provider of private wireless data networks and commercial drone solutions for mission-critical industrial markets. They build secure, wide-area wireless networks for critical infrastructure industries like railroads, utilities, and oil and gas operations, while also deploying advanced automated drone-in-a-box solutions for aerial data collection and security. When industrial tech infrastructure spending and autonomous drone regulations expand, Ondas booms. When corporate capital expenditure or long-term industrial contracts experience delays, it hits them first. Right now, this stock is heavily in focus because it serves as a crucial health check for the entire industrial Internet of Things sector, commercial drone adoption, and high-growth microcap tech valuations. Before we dive into these critical chart levels, make sure to like this video, subscribe to the channel, and drop a comment below with your current strategy. Are you buying this dip or are you sitting on your hands? Seriously, leave a comment right now. It helps the algorithm push this out to more traders. Let us pull up the charts and look at the raw technical analysis. The immediate trend direction is showing clear, consecutive lower highs and lower lows. We are seeing immediate short-term weakness as the price tests a major horizontal support level. If this current support zone breaks, the next major downside target opens up significantly lower, creating a vacuum that could accelerate selling pressure. On the flip side, momentum indicators like the relative strength index are hovering right on the edge of oversold territory. This tells us that while the sellers are firmly in control, the downward move is getting extended. Key resistance sits just above the recent breakdown point. Any relief rally is highly likely to face heavy selling pressure at that resistance line unless we see a massive spike in buying volume. When you look at Wall Street ratings and the broader institutional signals, the picture looks incredibly cautious. A significant number of consensus analysts have recently downgraded their outlook, shifting their ratings toward hold, sell, or even strong sell. The prevailing short-term outlook is dominated by negative signals, primarily driven by slower contract deployments, high cash burn rates during hardware engineering phases, and a general capital flight from small-cap tech equities. This institutional pessimism is putting a heavy cap on any short-term upside potential, leaving retail traders to fight against the massive wall of corporate sell orders. This brings us to the ultimate debate. Is Ondas genuinely undervalued, or is this a classic value trap? The fundamental bulls argue that the company's price-to-sales ratio has dropped to historic lows compared to its long-term average, making it an absolute steal for a company with proprietary technology and an expanding footprint in critical infrastructure automation. They see a massive margin of safety built on inevitable corporate digitization. But the bear counter-argument is that traditional valuation metrics are completely deceptive for small, unprofitability stage tech companies at the tail end of an economic cycle. If earnings are delayed because long sales cycles squeeze cash flow, then a lower price today just means the stock is going to look much more expensive tomorrow. That is exactly how retail traders get trapped. They buy what looks cheap on paper, completely ignoring the sheer operational costs and dilution risks required to scale to profitability. The downside risks here are very real, and the volatility is starting to expand. Ondas is heavily tied to the procurement budgets of major railway operators and enterprise clients, meaning its revenues are incredibly sensitive to corporate spending adjustments and regulatory approvals for autonomous operations. If an industrial client delays a network rollout or drone integration, margins compress rapidly. For retail traders, the risk is getting caught trying to catch a falling knife. Volatility shakes people out of their positions, forcing stop losses to trigger right before potential turning points. Let us map out the official bull versus bear case so you can see how this plays out. In the absolute best case bull scenario, we see a surprise stabilization in enterprise infrastructure data and a massive new multi-year contract announcement, prompting a sharp short-term short squeeze. Buyers step in at current support, volume spikes, and the stock invalidates the sell signals by reclaiming its moving averages, opening the door for a steady recovery back toward previous highs. In the worst-case bear scenario, the current support level completely snaps on heavy volume. This triggers an automated wave of algorithmic selling, confirming a continuation lower and driving the price down to major multi-year psychological support floors before any real accumulation begins. Looking at the outlook, the short-term perspective remains incredibly cloudy and heavily skewed to the downside due to these persistent technical sell signals. However, the long-term perspective reminds us that automated drone data processing, private industrial connectivity, and mission-critical networks never permanently disappear. Eventually, cycles turn and dominant market niche leaders recover. But that leaves us with the ultimate question for the days ahead. Are we watching the final capitulation before a massive historic rebound, or is this just the quiet beginning of a much deeper structural collapse?